Remember that the following content is just a summary of information available on the Internet, generated by AI. Investing decisions carry risks. American Water Works is the largest water and wastewater utility company in the United States. The company operates in a regulated sector, ensuring stable revenues, but also requiring significant infrastructure investments. The financial results for the fourth quarter of 2024 and the outlook for the future help determine whether to hold, buy, or sell the company shares. The financial results for the fourth quarter of 2024 were strong. Earnings per share (EPS) reached $1.22, representing a 39% year-over-year increase. Net income from regulated operations rose by 33% to $250 million, while revenues increased by $132 million compared to the same period in 2002 for the full year 2024. The company reported an EPS of $5.39, up 10% from the previous year. Adjusted EPS, excluding one-time factors, was $5.18, marking an 8.6% increase year-over-year. The company's growth was driven by several factors. Rate increases for customers contributed to higher revenues, and the customer base expanded by 90,000, including 69,500 from acquisitions. Favorable weather conditions also positively impacted results, adding 5 cents per share in Q4. American Water continues to increase its dividend steadily. In 2024, the dividend grew by 8.1%. The current dividend yield is approximately 2.4%, with a quarterly payout of $0.765 per share, totaling $3.06 annually. The company's consistent dividend growth makes it an attractive choice for long-term investors. The company is also heavily investing in infrastructure. In 2024, it allocated $3.3 billion for infrastructure upgrades and acquisitions, including $417 million for regulated acquisitions. Over the next 5 years, it plans to invest between $17 billion and $18 billion in infrastructure modernization and business expansion. From a technical analysis perspective, key price levels for American Water stock are support at $124.84 and resistance at $136.7. The average purchase cost per share is $128.8 over the past 5 days. There has been a significant capital outflow of nearly $3.75 billion, indicating potential weakening investor interest. Short interest stands at 20 to 25% of daily trading volume, but a short squeeze scenario is unlikely. Analyst recommendations suggest a median target price of $135.33, with a range between $105 and $115 among analysts. 2 recommend buying, 3 suggest accumulating, 8 advise holding, 1 recommends underweighting, and 1 advises selling. On a macroeconomic level, falling inflation suggests that the U.S. economy is in either a recession or a recovery phase. If the economy is in a recession, the utility sector in which American Water operates is a defensive choice due to its stable revenue streams. However, if the economy is recovering, higher returns might be found in the consumer discretionary and technology sectors. Interest rates also play a crucial role. If rates continue to rise, American Water's high debt levels could become a burden, potentially limiting earnings growth. If rates decrease, defensive sectors like utilities may become less attractive compared to high-growth industries. In summary, American Water is a strong choice for long-term investors seeking stability and consistent dividends. The company's earnings growth and predictable revenues from its regulated operations make it a reliable defensive asset during economic downturns. However, its high debt levels and capital outflows may concern short-term investors. Current valuation suggests that the stock does not have significant upside potential in the short term. Buying at levels below $125 per share could provide a better entry point. If the economy moves into a recovery phase, the utility sector may underperform compared to high-growth industries. Investment decisions should be based on an investor's time horizon and risk tolerance. American Water is a solid defensive stock with stable earnings, but its growth potential may be constrained by high financing costs and investor capital outflows. If the priority is capital preservation and dividend income, holding or buying on dips is a sound strategy. However, if the goal is maximizing growth in the short term, other sectors may offer more attractive opportunities as the economy recovers. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014, on market abuse, and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016, supplementing Regulation EU, number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.